Relief for all those couples who jointly own property. The Income Tax Appellate Tribunal in Mumbai on Wednesday ruled that in a property co-owned by spouses, only the spouse who has invested in the property needs to pay capital gains tax. Now, up until now, both the husband and wife had to pay capital gains tax. This ruling came in the case of a medical professional, Vandana Bulchandani. An income tax officer noted that she had not disclosed the capital gains arising from the sale of a 2.12 crore rupee property in Parel that she jointly held with her husband, according to her income tax returns. Now, despite having informed the IT officer that her husband had made the entire investment, the officer claimed that the entire arrangement was done to avoid tax payment. However, the ITAT observed that since the husband brought the property and the purchase and consecutive sale was reflected in his account books and IT returns, Bulchandani did not have to pay any capital gains tax on the property. In order to get better perspective on this matter, we caught up with Sameer Kanabar, partner tax and regulatory services at EY, and asked him what exactly this verdict means for home buyers.
I believe this is a fair ruling. It is on the principles of equity and justice, and on that basis I believe that this ruling should be applicable to most of the taxpayers, and obviously even if it is challenged, I believe the view held by the Income Tax Tribunal would be likely even accepted by the higher courts as well. When you buy a property, you have to do 1% TDS. Now again the question always arises that whether if you are co-owners, then whether both of them, the co-owners or all the co-owners, have to withhold 1% tax, or only the main person who is investing has to withhold 1% tax. So I believe based on this ruling there is also a reasonable clarity that if the investor is taxable for the purpose of capital gains and not the co-owner who has not invested, then on the same principles even the investor who is investing in a home property will be required to deduct 1% tax, and not the co-owner who has not invested but is just for the namesake.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.